Coming in at number 1, drum roll, please. The number 1 stock that millennials bought in the month of May is... It's a new month, everyone, which means we have a new list of 10 stocks that millennials have been buying. Does that mean that you should be buying them? Or if you've already owned any of these stocks on the list, did you make the right choice? Most importantly, which stock is number 1? Find out all of that and more coming up. Hi, my name is Brad, and this is Own the Chaos. The stock market is crazy and chaotic, and I've made it my mission to help you own it and make a little money and hopefully make a positive impact on your life. So the top stocks on this list, guys, was pulled from Robinhood. After all, 80% of Robinhood users are from the millennial generation, and I myself am a millennial, so I think I have some leverage to speak on such things. This list is based off of the popularity changes over the entire month of May, as opposed to going with the top 10 stocks overall. I think this is a little bit better and more accurate representation of what you all are trading out there, as opposed to the way that I did this last month. But let me know what your thoughts are on this in the comments below. Would you like to see changes in the entire overall spectrum, or do you want to see what the popularity changes are month to month? Let me know, and I will make those changes accordingly. Okay, getting straight into it, at number 10, we have American Airlines, ticker symbol AAL, and was trading at $11.15 as of this recording. Now, this was a fairly decent change from a 534,000 owning AAL all the way on May 1st, jumping by over 16,000 investors to 551,156. Now, here's the thing. Yes, almost all of the airliners moved up this month, but not all of them moved up the same. There are other airliners that absolutely crushed it, and American Airlines was not one of them. American only moved about 20% and is still in danger of bankruptcy. They have loads of debt, and according to an article from Forbes, the break-even load for American Airlines flight is 80%, and this is the worst among major airlines. So in my opinion, if you want to invest in an airline or two, fine, but American isn't it. All right, so at number 9, we have Hertz, a near 30% jump in investors on this one, from 44,000 of you beginning of the month, and over 60,000 that hold it now. Ticker symbol HTZ is trading currently at 89 cents a share as of this recording, and all I can do is just shake my head at this one, guys. Now, I get the allure here. The stock was sitting at $20 a share at one point, so this has got to bounce, right? I mean, how much lower can it go? The answer? A lot more. The company recently filed for a Chapter 11 bankruptcy, which caused the already poor performing stock to get absolutely wrecked when the filing came out. Hertz has roughly $19 billion in debt, and most of that debt was taken out against the vehicles that they own. Given the crisis that we are in, there was no way demand was going to come back in time to take care of this debt. Hertz gambled and lost. The only bright side to this is that they could possibly work out a restructuring, but don't bet on that either. Billionaire investor Carl Icahn divested all of his position of Hertz, stating that I have been an investor and supporter of Hertz since 2014. Unfortunately, because of the Rona, which has caused an extreme, rapid, and substantial decrease in travel, Hertz has encountered major financial difficulties, and I support the board in their conclusion to file for bankruptcy protection. Yesterday, I sold my equity position at a significant loss, but this does not mean that I don't continue to have faith in the future of Hertz. This was a nice way of saying, in my opinion, that they're done. Now, Carl isn't going to come out and say it, but I will. Stay away from this thing. Okay, number 8 is Carnival Cruise Line, ticker symbol CCL, and was last trading at $16.65 as of this recording. It was also on last month's list, and my opinion hasn't changed. 17,191 additional Robinhood investors hopped in on Carnival, bringing the grand total up to over 467,000. Sure, it's doubled from its low from when the market bottomed, but how much more do you think this has left in it before the note holders who have $6 billion worth of shares start dumping on this thing? Balance sheets are everything to an investor, folks, and when I see a company whose debt is twice that of its market cap, I'm gonna have to pass. The truth is, Carnival may be seeing some interest in people wanting to get on a cruise, and that's why we're seeing some movement from the stock, but this won't last. In my opinion, if you've made money on this, great, but don't hold on to it forever. Okay, coming in at number 7 is Delta Airlines, and this airline, I'm okay with. Ticker symbol DAL was last trading at $26.18 per share. 2 weeks ago, I had stated that this was going to be a good value under $24, so I hope that some of you got in on this on the cheap and are green at the moment. CEO Ed Bastian stated back in May that he is confident that demand would fully recover within the next 12 to 18 months, and that they are starting to see more and more people buy plane tickets. Remember that break-even factor we discussed with American Airlines? Delta is about 5% less than American Airlines is, and thus needs less people to fill up their planes to break even. Further, they have far less debt, less inventory, and are the company with the highest valuation. I have all the confidence in Delta and that it's not going anywhere, and if you want to be in an airliner, this is the one that I would go with too. So good job on this one, guys. All right, so number 6, it's Tesla. And I mean, what else can I say about this that I haven't already said? Ticker symbol TSLA was last trading at $879 a share as of this recording, and nearly 19,000 additional investors bought Tesla last month. It made a monster move today as a result of a historic launch into space from Elon Musk's private company, SpaceX. It's been 9 years since an American crew launched from the US to the International Space Station, and it was glorious to watch. Now, I think this is a silly reason for today's run on Tesla, as it has nothing to do with Tesla itself, but it was pretty badass to see astronauts Doug Hurley and Bob Behnken roll up to that rocket in a Model X, was it not? Nevertheless, Tesla will change the world in its own right, and this is so much more than a car company, people. In my opinion, set it, forget it, put this in a retirement portfolio, and thank me in 30 years. $5,000 a share within the next decade is not out of the question, and I bet we even see that within the next 5 years. Speaking of the number 5, next we have GNUS Brands. Ticker symbol GNUS is currently trading at $2.60 per share, and as of this recording, and over 19,000 of you bought this over the last month. GNUS Brands is a global brand management company that creates and licenses multimedia entertainment content for children. This stock has risen over 1,000% from its recent lows, and here's why. Chairman and CEO of GNUS Brands, Andy Hayward, commented that I am pleased to report that GNUS Brands is a stronger position today than it ever has been before in its history. With last week's announcement of Cartoon Channel launching on June 15th and available in over 100 million US TV households and 200 million mobile devices, we have put in an important stake in the ground to be one of the preeminent ad-supported kids digital networks. In the COVID and post-COVID environments where there are more kids at home and in front of their devices, we will be well positioned to take advantage of that growth. Now, this is all fine, and the stock has made an incredible turn, and I won't say that this can't continue, but consider the risk here. It's still a penny stock at the end of the day. It's already run 1,000%, and if you're in this and haven't sold anything, you need to, in my opinion. At the very least, take out the amount of money that you put in and leave the rest in there if you want to see where this runs. Because at that point, you're at least protecting your initial investment. GNUS has a ton of debt still, and they have been putting out multiple offerings in May. Eventually, investors are going to get sick of the company dumping shares onto them, and this will drop. On the plus side, if they slow down the offerings a bit, this could really continue to move. Okay, so coming in at number 4, and I love number 4, guys. I can't tell you how much I love this stock. Okay, we have MGM, and man, I don't know what else to say about it. Of all the casinos, MGM has the best balance sheet out there. I have been singing their praises over the last 8 weeks and signaling this a clear buy when it was under $12 a share. As of this recording, it's sitting at $17.80 a share and still has plenty of room to run, in my opinion. Many people like Wynn Resorts over MGM, but I just simply have to disagree. It's cheap. They have tons of cash to outlast this Rona crisis as long as it takes. Executives have been buying up millions of dollars of their own company, and with them already looking to open up very soon, I would expect a nice little pop from them once the doors do open. This was trading at $34 a share before the crash, and I think that this eventually gets there over the next 12 months. Who wouldn't want to double from here? That being said, I think we could hit a few snags along the way, which could drop the price here and there. To me, that's nothing but an opportunity, and we'll be adding to the dips as they come. Okay, now with the top 3 are coming, folks, and if you're getting value out of today's video, I certainly would appreciate it if you'd hit that like button. And before we go any further, I would like to invite you over to the Chaos Crew. If you're finding trouble which stocks to buy or watch for every morning, the Chaos Crew can help you with that. Click the join button next to subscribe, subscribe and get a daily watch list of 5 stocks that I believe are set for some serious moves every single day before the market opens. For $4.99 a month, I think it's an incredible value, and if you do as well, I would love to see you there. Okay, so moving on to the top 3. Coming in at number 3 is Disney. Now, my hope is that you didn't buy Disney because Finding Nemo was your favorite movie, or Mickey was going to toss on that magic hat and magically print us some money. If you bought Disney because over 50 million people subscribe to Disney Plus, and that revenue brought in from that softened the blow to their latest earnings report, then I would say that that's probably a good idea. If you bought because their main revenue driver is Disney Parks, and you notice that Disney World stores have reopened, and the parks are going to do the same within the next couple of weeks, I would say that that is a good idea as well. Look, after the crash, I was imploring people to scoop up some of this on the cheap on anything under $100 a share. It's gone up as high as $125 a share since then, and currently sits at $118 a share as of this recording. If you missed the opportunity below $100, I'm sorry to say that you won't be seeing that again, in my opinion, at least anytime soon. If you did buy under that, I would be holding on to this because combining the streaming service revenue and the park revenue will send this, in my opinion, and I think that the next year, Disney makes a strong move to at least $175 a share. Okay, so the stock coming in at number 2 was surprising to me in a way, and I was surprised that it actually wasn't number 1, and that is DraftKings. Ticker symbol DKNG is currently trading at $43.50 per share and has been on an absolute tear. DraftKings was featured on this channel a few weeks ago below $25 a share, and I loved it then. If you've been holding since then, great. You made a ton of money, but it's getting to be a little bit wild at this point. I have all the faith in DraftKings that they're going to be a serious contender when it comes to sports betting, and the industry is only going to grow from here, in my opinion. Even when sports are back, most won't have fans in the stands, and people may be turning to the sports betting industry even more so to seek that engagement that they love when being at the game. Not to mention, if you don't want to go out to casinos in fear of your own safety, DraftKings may end up being your solution, and I think demand could only increase as well. If you're not in, I would wait for a pullback though of some sort, as this is extremely hot to buy in here at all-time highs. And if you are still in from when we first brought it here, then I would consider at least taking some profit. Not all of it, because I think that if there's a clear possibility this keeps going, but nothing ever continues to go straight up, as we all know. So again, if you got it, great. Might be a good idea to take some off the table and keep a few just to see what it does. But if you don't have it yet, I would wait for a clear pullback and some sort of bounce. Okay, finally, coming in at number 1. Drum roll, please. No? Seriously, where's the drum roll? Thank you. Okay. The number 1 stock that millennials bought in the month of May is Spirit Airlines. Spirit Airlines? What? Okay, to be honest, who bought this because Davey Day Trader Portnoy bought it? You know who you are. Okay, I get it. This made an incredible move, and to be honest, it was a great one to buy into. Over 28,000 new investors bought into Spirit Airlines on Robinhood, and it's currently trading at $14.26 a share, which is about 80% from its lows. An incredible move. Honestly, I think this actually continues. Spirit has raised enough cash to last 18 months at its current burn-through rate at $4 million a day, which is far better than any of its competitors. As we discovered earlier, airfares have stabilized and started picking up in the last 4 weeks, and we could see quite a turnaround in travel. Now, I don't know who likes to fly Spirit because I think they're a terrible airline to fly on, but if you're short on cash and still need to get out of town for a few days, Spirit may start to look like a way to travel on the cheap, especially as places such as Disney and Las Vegas are likely to see more tourism this summer, and as theme parks and casinos gradually reopen. I think we could see $25 a share from Spirit before the summer is over, and would consider holding on to this one if you already have it. But let me know what you think about this one. Leave me some comments down below on this list. Are you in some of these? Do you like them? Do you not? Also, don't forget to subscribe if you haven't done so already. And if you want to see more videos from me, check out this one about top 10 stocks that I found under $10 that I don't think will be there much longer. Or if you want to check out these that are my favorite gambling stocks to buy as well, I would love to see you in the next one. And as always, folks, I will see you all before the bell, and B Smith is out.